Hi everybody, it's John Seville from Acorn Wealth Corp here, and we're going to do a quick video here to talk a little bit about what we've got coming up in our upcoming webinar about finding the perfect storm. Finding the perfect storm is a very important topic to any trader because it talks about how we as traders locate what investments or trades we're going to make. So let's get into it, and I'd like to start off by asking you a quick question. How do you make your decisions, your investment or trade decisions? Most people usually go with, the news, newsletters or advisors. Some people take tips from friends. And of course, other people invest in things that they're familiar with or what's local to them. So they might invest in local companies because they live next to the headquarters or because their friends work for the company. But most of these things never really have anything to do with whether that stock is the best thing to buy today and whether it meets a strategy. It's much more to do with emotions. And this is why 95% of investors generally lose money, because emotions have no place in investing. And stories usually aren't there to help you. A couple of reasons. One, the news or anything that you're probably aware of is already priced into the stock. So you think you've come over some great company and you've realized something that most people haven't, chances are there is really smart money and with deep pockets that have already figured that out and have already moved the stock accordingly. So most people end up investing based on information that doesn't help them or rarely helps them. They invest emotionally and really lack a consistent strategy with any real direction. And it's not surprising when the market is full of all of this noise. All of these things you read in the papers that create this crowd mentality of greed or fear and often makes you buy at the top and sell at the bottom, which is the worst way to make money. So we have to think about, well, how does the smart money do it? Because there are funds, obviously, and you see these people all the time, the 25-year-old driving the Ferrari down the street in New York, running the hedge fund, and so on and so forth. Well, how are they making money? And basically, if you want to start out with the investment types, the long-term buy and holds that look at the value propositions, well, those guys, yeah, they're looking at what the company's worth. They are trying to figure out where the next diamond in the rough is, but they've got incredibly deep pockets, teams of people with, Ivy grad degrees in economics and business that do nothing but this all day, all year round, and they have, in some cases, even got satellites in the sky that take photographs of things like Walmart parking lots to try and determine how busy they are and to guess at how good a quarter Walmart's going to have. So you're competing with very, very tough situations to outsmart. And even more importantly than that, the way the market has tended to work in the last 10 years is actually through algorithmic trading. And for those of you who don't know what that is, what algorithmic trading is basically computers, floors of computers that actually trade hundreds of thousands, if not millions of times a day based on rules. There's no one behind them, no one sitting at the keyboard, but millions and billions of dollars going in and out of stocks based on a rule system. And they actually estimate that 70 to 80% of all of the trades in the market on a daily basis actually come from these very computers. So think of that. That's 70% of the volume in the market going in and out, not based on whether the company is good or not, or whether the economy is good or not, but purely based on rules, on ones and zeros. And these computers are making billions and billions of dollars. And these forces are so strong because when you control 70 to 80% of the market, you have a dangerous amount of influence over which way the market goes. And in fact, in May 2010, if you remember, the stock market plunged 1,000 points. The Dow plunged over 1,000 points in what was called the flash crash because one of these computers started selling and it created a domino effect where all of the other computers sold as well. And then just like a stoplight went from red to green, as soon as the market hit some predetermined level, some kind of magical floor, it stopped going down and instantly went straight back up. And we're talking about billions and billions of dollars going through the market in order for this to happen. So this might seem scary, but it's actually a great opportunity. And this is how we started the company back 7 years ago when we started Acorn. We thought, well, hang on a second. Computers don't think. They're not waking up in the wrong side of the bed and having an argument with their husband or wife. They don't have food poisoning. They're not greedy. They're not fearful. They just do what they're told. And they do what they're told again and again and again. And if you think about it, if you woke up one morning and you found that all of the shoe stores in the city you live in had been robbed and red Reeboks were missing, how would you find the robber? Well, logic would suggest that you just simply look for the next place that has red Reeboks. And the same thing with trading. These computers are actually just following a system of rules again and again and again. The reason why it looks chaotic when you look at a chart is because there's about, anywhere from say 60 to 100 different types of rules that they could be following. So when you look at a chart over 12 months, there could be 60 different patterns that make up that 12 months. Now, to the untrained eye, this looks random and chaotic, but to a trader and to a computer, this is very organized and actually reverse engineerable, which means we can track it. So the whole idea of what we do is to actually create scans to look at when these big moves happen and detect the fingerprint of when the smart money gets in and when the smart money gets out. Because if you can get in around the same time that 70% of the volume is doing the same thing and get out before 70% of the volume starts to sell, yeah, you don't have to be a genius to work out that there could be a real opportunity to make some great money there. And that's what trading is all about. So basically, charts tell a story. And this is how we start to get into the nitty-gritty of it. All of these different fingerprints have a different story, different probabilities. So when we see a chart that looks like this, where the stock is going up and then kind of looking like a bit of a pizza wedge pointing down, even though it's going down, this is actually called a falling wedge. And what's most likely going to happen next is it's actually going to shoot up. Now, this could seem odd, but that's in fact the probability of what that pattern will do. Likewise, if you see a pattern where it's going up and the pizza wedge is pointing up, which means the stock's going higher and higher, but getting tighter in its range, that actually means the stock is most likely going to go down. And there are many different types of patterns like this, each with their own percentage of probability of how often they'll go up versus down, a percentage of how much they'll normally go up, whether it's 10% or 20%, and all these types of factors that make up that rule book that these traders and computer traders follow. And understanding those probabilities is the real key, because subtle differences make a big difference. For example, here, if you saw what this is called an ascending triangle. So this recipe, when a stock is going up and its lows are getting higher, but its highs are staying the same, looks very similar to this wedge over here, where it, again, looks a bit like a triangle, but in this case, the highs are getting higher. Now, the natural assumption would be, well, if the highs are getting higher, it must be an uptrend. But the key difference is that if in this pattern, it's actually bearish. It's most likely, most probable, going to shoot down, whereas on the left, it's likely to shoot up. Understanding probabilities is how you make the money, because you're never going to get it right 100% of the time. You'd be lucky to get it right 90% of the time. But you don't have to get it right all the time to make a lot of money. What you need to do is to know when to hold them, when to fold them, to know exactly what kind of hand you have when you look at the chart and know what the odds are, the probabilities are of you making money. Casinos in Vegas make billions just being able to win 51 times out of 100. In the stock market, you can get much better odds than that, and that's how traders do this for a living, and that's what we're going to show you. So, uh, so what's the opposite? Well, without a strategy, you're simply guessing with no hope of consistency. Whether you want to trade for a living and you want to do this for a career, whether you want to do this for capital growth, the most important thing is not how much money you make, but how consistently you make it. If you're not being consistent, then you're going to, with your trading, you're constantly going to have different variables. Every trade will be different because you've never found it the same way. It never looked exactly the same. So you're doing constantly different trades. And without having a consistency across the board with how you approach your trading, you won't have an exact method of knowing when to get in, or most importantly, when to get out, which means how to manage your risk. And you'll also have no ability to be able to replicate the same conditions of the trade to achieve consistency. And if you can't replicate success, it's just a lucky shot. So again, I'll ask you the question, what is your strategy? If you could sit down now and I gave you a piece of paper and asked you to draw exactly what the chart should look like today if you were going to buy it tomorrow, exactly what it would look like, what would you draw? And if you were then to write down exactly what the other conditions should be, such as is there insider buying, selling, what's its earnings ratio, and what are the indicators saying, like the MACDs and the RSIs? All of these things, very easy to learn, but very important to have in your investment strategy. So what would you draw? Because if you know what to draw, if you know exactly what it should look like, you can build a scan to do it for you and find that stock. And that's the great thing about technology. And that's exactly what we do. Basically, what we do each night is we have scans we've built over the last 10 years that go through the market and actually analyze every single stock in the market, looking for the pattern that we want, the pattern that we find to be the highest probability to make us money out of all the patterns that there are out there. And it does that in seconds. And then once we get our short list, my job and the other people that we work with, their job each night is to go through that short list of maybe 10 stocks and spot which one we want to trade. So we then know exactly where we want to get in, we know exactly where we want to get out, and we know exactly where our stop losses should be to manage that risk. And basically, if you're doing that efficiently, you shouldn't be having to spend more than 20 minutes a night managing your portfolio. A couple of examples of that. American Express met the strategy. Our strategy told us that it was looking to drop sharply, and that's exactly what it did. Another stock that came up in that same scan the same night, Microsoft. Also, our scan told us that that was going to be disappointing earnings and that that was going to plummet, and it did. Third stock, AutoNation, also came up in that scan, and that was also being told to us that it was going to drop and disappoint on earnings, and it did. And in fact, this one I actually traded myself and through trading, spending less than 20 minutes to find this opportunity, I was able to make 25% on my money in less than 24 hours. And of course, that's a lot better than you're going to get in any kind of usual fund or a GIC or anything like that. And when you have efficiency, when you have something that manages it for you, that allows you to trade to live, not trade to work. You should be running your portfolio like a business. You should have a strategy. It should be consistent, and you should be able to manage those variables. Your strategy should also be making you money while you go out and enjoy your life, play golf, travel, work, whatever you do. But if you're spending hours stressing over your positions, finding stocks and not finding them consistently or knowing what to look for, you are still working for your money, which is not what investing is about to be. And here's a great example of what investing should be. This is about 2 months ago. I went hiking in the Canadian Rockies, and I was able to take a 16-kilometer hike up through the Rockies, up through the snow. And while I was enjoying my time, I had positions in the market that were making me double-digit returns while I enjoyed myself. And some of those trades paid for the entire cost of the vacation. So, when you read books like The 4 Hour Work Week that talk about getting your money working for you, this is what it's all about. Technology can do some amazing things these days. And when it comes to the stock market, when you know what you're looking for, you can build scans to find it for you, which means instead of spending hours throughout the day looking at a screen or researching, you can run a scan that will go through every stock in the market in seconds and tell you exactly the short list to consider buying for the next day. And that's based on knowing, again, the exact probability and profitability of different patterns. So that's what we're going to be covering in the webinar. We'll be showing you exactly how to do this yourself using publicly available tools. And we'll be showing you some of those high probability, high profitability patterns that you can start scanning for immediately. So over this course of this webinar, hopefully that will allow you to save yourself countless hours going forward and make a little bit extra money. Look forward to seeing you all there, and happy trading.